I go to the higher time frames and try to look at what is the general direction of the market, and then I go to the lower time frame, and then I start looking at this how the fractal behavior of the market is.
Yeah.
And this is where it goes, touches the. So I know that even if it is going in the other opposite direction, eventually it will go to the direction in which the upper time frame is
Yeah, exactly.
behaving right now. So even if it is going back touching the fair value gap, I know it's going to touch the fair value gap, and the moment it touches it and reverses, that kind of becomes the entry point.
Yeah, and even the same thing, in like the higher time frame, this is the 1 hour, you can see the fair value gap on the 1 hour that you're hitting.
Mm-hmm.
So you can confluence with things like that, or that you took, the previous day's high already at this point.
Mm-hmm.
So if you already took the buy side, you should
Mm-hmm.
look for it to seek the sell side.
Yep.
And eventually, again, it makes a fake
Mm-hmm.
low here, because like I was saying, it makes a double bottom, and that's why when you get this really long move away, and all that time passes,
Mm-hmm.
like when they move with speed, like on Friday. See how they make it was admittedly with the news release, but they make the quick down move and then they rifle immediately and don't stop. Versus here, it just kind of lollygags to go long, like it takes a while. That's not what you're looking for. You're looking for speed. You want to see very, very quick moves. If it's taking a while like this, it's probably going to roll over, because this, I don't know if you can see it, but this ended up getting hit this low, so everyone's stop losses got hit here, and they sold into this as their exit point for their shorts that were up here or here.
Mm-hmm.
And so that's the idea with the pairing of orders, is they need to get in by force, get out by force.
Oh.
So, and you sure you're good with all of this so far?
Yep, I'm fine. Yeah.
Okay, because we're going to go into something completely different now. It's not even, it'll barely be related to charts.
Yeah.
So this is going to be about time and time of day that you're using to execute and everything like that, and specific times of day, very specific things are supposed to occur that you look for,
Mm-hmm.
for those types of moves to happen. So the first thing I want to talk about is like the 3 phases of a candle,
Mm-hmm.
which is, you have the open, high, low, and close, which is the 4 components you need for a candle, right?
Mm-hmm.
So that can also come in the form of the market will open at the low, make a high, and then close.
Yeah.
So realizing that this is the pattern you want to assume that all candles take, and it's essentially in 3 phases. So you have the accumulation, the manipulation, and then the distribution of those. So usually what it's trying to do is trip people to get them on the wrong side of the market and then crushing them. Right? Just like literally everything. Admittedly, so
Just like the market itself.
yeah, that's what the market's supposed to do. So same thing here. People think there's a low in here. That's your manipulation phase. It distributes them lower. But you want to assume that every candle is
like that.
in that order. So for example here, this hourly candle, you want to assume it opened up here, it created a high, made the low, and then closed.
Okay.
Now what doesn't matter is the order that it did it in. So what I mean by that is, I want you to realize that what I'm going to show you is the same delivery. So how we have a candle that's kind of like this, right? This is the same red one we were talking about.
Yeah.
What the market could have also done, so we're assuming it opened up, made a high, made a low, and then closed like here, right?
Yeah.
Open at the high. What it could have also done is do something like this, where it makes the low, makes that high, and then closes.
Yeah.
I want you to realize that, because you don't know how the candle what happened on the inside of the candle in terms of the order. This is just what you want to assume has happened.
Okay.
Because the candle should go through its manipulation phase and then its distribution phase. But I want you to realize that once this candle closed, this is the same thing almost. It is the same thing.
Yeah.
Regardless of what actually happened on the inside, you want to assume that happened. So this candle, you want to assume this next one, it made the low, made the high, and then closed right here.
Yeah.
Same thing. Open, made the high all the way up here, and then closed. And that's just the order you want to assume it in. Because even if it does something where it just kind of sits here, makes this low, makes this high. If you think about how this really opened, this is basically a doji, right? Or like a hammer, I should say. But you don't know because they could have done it at low, done anything like this, and then still close here. I want you
Yeah.
to realize that these are the same, like these are still going to print the same thing when they're closed.
That's correct. Yeah.
And so that's what you want to assume is happening with all of these candles in the order that they're printed in.
Would it be opposite if it is a loss candle? I mean, like there's a gain candle, like a green.
Yeah, so you would assume it would set, yeah, so for a bullish or like a green candle, you assume it opens, set the low first, ran to the high, and then close.
Okay.
And then for a bearish one, you're going to assume it opened,
High low
set the
close.
high, distribute to the low, and then close.
Okay.
You want to assume that that's the order that they do them all in, regardless of what actually happened in the center.
Perfect. And what if there are no wicks?
Then the high is the close. It's the same thing. How this low is basically the same as the open.
Mm-hmm.
Actually, this low is the open, same thing. You just assume that was the manipulation phase, which is open there, and it just ran up there.
Yeah.
Because sometimes you will have candles that are in part of a larger markup, so by the time you're at this candle, it's pretty obvious that it's like, we need to go. And it's just going to keep going. It's not going to take time to manipulate if it's already in the distribution phase. So with these accumulation, manipulation, distribution phases...
Are you speaking?
What? Am I speaking? Did the internet cut out again? So with the idea of the candle making that order of formation,
Mm-hmm.
and the three phases of the accumulation, manipulation, distribution, the AMD,
Mm-hmm.
what I want you to realize is, for example, a 4-hour candle is going to take 4 hours to print.
Yeah.
Now, the reason that is important is what a candle will not do is it will have relatively, not say equal space, but it will have a good portion of a candle be cut up into those phases. So when you have it'll be something like an accumulation, a manipulation, and then the distribution, right?
Mm-hmm.
So it's not divided into like 3 equal parts. And what
Yeah.
isn't going to happen is you're not going to have the accumulation, manipulation phase be like that small and then distribute the rest.
Mm.
Right? It is broken down into some phases. So the reason that's important is if you think about a 4-hour candle, you're not going to have all the manipulation in 5 minutes and then distribute the other 3.5 hours.
Mm-hmm.
You might distribute, or you might accumulate and manipulate for first 2 hours of the candle,
Mm-hmm.
or first 3 hours of it, and then distribute the last.
Yeah.
Because again, the order you do this in doesn't matter.
Mm-hmm.
You just need to realize that it opened, set a low, made a high, and then closed, or vice versa.
Mm-hmm.
Because especially for a daily candle, right, where there's 23 hours in that candle printing, you're not going to spend the first hour manipulating, setting the low at 6 o'clock, and then distributing the other 22, right?
Mm-hmm.
I think that wouldn't make sense. So it's the same thing where you have to allow for that type of movement to occur and have that patience to know that, okay, maybe for the first half of the day, the first little bit of the hour, the candle needs to open up, and you know that it's probably entering its manipulation phase,
Mm-hmm.
and then closing. Because even this candle right here,
Mm-hmm.
how it just closed like a hammer like this,
Mm-hmm.
right? It opened, made a low, set the high, and then closed.
Mm-hmm.
On the, get really nice on the same thing. Opened up at 2 o'clock right here on this candle, came all the way down, spent about 10 minutes manipulating,
Mm-hmm.
and then distributed the rest all the way to the top, just
Mm.
like in that profile here, or this one. It doesn't it doesn't matter which one it does.
Yeah.
You just need to realize the order that it does it, and that's how you'll be able to see things fractally.
Mm.
So you know that when you're looking at a 1-hour candle or whatever it is, you can have a good idea of how it printed on the inside
Mm-hmm.
without actually needing to look at the 5-minute. Or if you do look at it, you just get it for extra detail.
Mm.
If you want to see like what's balanced and everything like that for the price range. But to get a general idea of what's really happening, you want to be able to view it from that top-down idea
Mm-hmm.
and assume it went open, low, high, close.
Yeah.
In this case, for a bullish candle.
Mm-hmm.
Well, the reason that's going to be so important is for day trading and all this stuff. essentially the market is going to do daily is have a profile, and it's going to follow that accumulation, manipulation, distribution idea. So you can see these blue lines that are here, these horizontal ones. These are essentially marking out midnight, east, which we are east, so it's midnight. That's essentially where this computer's day is starting. It's not starting at 6 o'clock when the futures market opens, it's starting at midnight. So just like in here, you can see how the market opened, it manipulated lower, and then distributed higher, and then closed. That same profile we're talking about in the paint right here, open, low, high, close.
Yep.
You can see it right here, open, low, high, close.
Yep.
Right? It's the exact same thing. And again, you're not worried about the order or what actually happens on the inside, because you don't need to worry about this. You need to be able to see that that's the formation happening. You can see my mouse cursor. That's the idea. You're not concerned about what happened on the actual inside of it unless you need the information. But you have that idea that you assume the candle printed that order. Again, even just for that profile on the inside, you assume this candle did the same exact thing. And this is how the market is able to be fractal. It's doing this power of 3, the 3 AMD stages, on every candle, on every time frame. So when you treat a daily candle as that AMD, you can do the same thing with like a 1 hour candle and trade like a 1 minute the exact same way. The only difference is, again, going to be the time it takes for everything to print. That's the only difference. It's the same setups, right? Because if you treated a 4 hour candle as a day candle, you can still get a very, very powerful move if you understand how it's printing in the order that it should form in. For example, you recognize that if this candle is opening at 9 o'clock and you know the market opens at 9:30, if you're opening and manipulating lower, if you're manipulating lower, you're likely to distribute higher also. Because again, what is it doing? It's trapping people on the wrong side of the market on a Monday. So they can do what? Run all their stops. And you can see it close right above that high. Just even oh, my Discord.
Yeah.
I can show you what I was talking about.
Yeah.
That was the idea of the double FEGs rolling over and everything. Like, that's the screenshot I had when I took it. And then 5 minutes later, that was the puking of it over. And again, I'm sure you believe me. I'm just first showing it just so that way.
No.
Kind of build. Because again, that was today. Like, you can't fake Monday if it literally happened today. You know what I'm saying?
Yep.
But same thing. I also took the long here off these red candles supporting price. You can see how in the market maker model ideas you have green candles getting pushed down and supporting price on their way down, and then you have that shift, and now those candles that were supposed to support price failed.
Sweater.
So now you're looking for those red candles to support price.
Yep.
Now, those were 2 trades I took. Well, no, I didn't take that short. I just watched it because the guys tomorrow. I don't want to trade. But same thing. Monday, all the buys down in here. Which is that same picture you were showing. And again, it's the same thing. This is that 4 hour candle right here. Opens up around. Yeah, opens up at like 9 here. Or no, opens up here. Up here, I'm sorry. Manipulates down. If you have the idea of a 4 hour candle in the first 30 minutes to an hour, you're going down, and you assume that's manipulation. When you get bullish signals and things, order blocks, FEGs, and things like that forming on the latter half of the candle printing and finishing, you can assume that's gonna. If you manipulated lower, you should distribute higher. That's how you're able to carry a trade like that. And that was on Monday. But it's that same idea. You're doing it on every candle, all the time, and that's all you're really looking for. In terms of the accumulation and everything. I don't know. So are you with me so far in this?
Yeah.
Okay.
Yep. So I would see, the other day I had asked you a question. I thought about it a little bit, and I think I got the answer. I was asking you the question about won't these people know about all the open orders? And so I think they will probably know the open orders, but they won't know all the stop losses. So
Correct.
for as far as people's stop losses are concerned, they only can guess that people are placing stop orders or stop losses
Correct.
under the logical swings.
Under the logical spots.
So
Yeah, those
that's why they go
swing
beyond that
lows.
swing
Yeah, those
and make
swings
sure
that
they
should
can
be
catch as many
protected.
as possible and create that big chunk for themselves, and then they manipulate that market with that big chunk.
Correct. Same thing like we were talking about with those, how you were saying you put your stop loss at the bodies, and then it
I
runs
think
into all
your
those
voice is
wicks
still
and it
breaking up.
triggers all those stops.
Your voice is very broken. I can't hear anything.
Is it still broken?
Who sit in those S&P pits and stuff like that?
We'll sit
Do
in what?
do they also not see the stop losses?
No. There's no way to tell how many stop losses are at a level. And the algorithm that runs this doesn't know either. It just uses them as reference points as what would be likely that people would have their stop losses there, based off of like books, shit like that. There's no real way to tell how many stops are there. But when you see the most obvious ones and have an idea of what other people are seeing, and that's where they would put theirs, you can attack it.
Okay.
But yeah, there is no real way to tell how many stops are there. You just have to have that idea of either, especially when they try to break a low and then that new low has to get sold into. You want again a retrace in terms of time spent, or in this case displacement up to get people to think this is the bottom so they can crush into it, because they're generating sell orders down here that they can use to keep going.
Okay.
And that's why people will get trapped trying to long this when it's like, well, if you just keep attacking that, it has to you have to generate liquidity somehow at at that new low that's made.
Yep.
But that's a very, very easy trap to get on that a lot of people have done throughout history. Especially like a trend day, they're trying to short a trend day instead of just buying the big trend day, right? Very, very common thing that apparently has been a thing throughout history. I've been reading not reading, but I've heard some older people on the floor from like 15, 20 years ago, and they'd say the same thing as like what people do now. So it's all human based in terms of like emotion. Pretty crazy.
I had actually just a side conversation, but I had seen the Chicago Options Exchange pit, S&P 500 pit, and it's a bloody fish market. I loved it. I loved it. I loved every minute of it, but um, somehow I wasn't prepared to actually work there. But I mean,
Oh, that'd be sweet if you could work. I would love to work there. I've always wanted to be on like a floor, just to see what happens. Like knowing what I know now. Oh yeah, I would love to do that.
you can clerk for somebody there. I mean, you have a computer background. You can easily clerk for somebody there, and pretty soon they'll teach you all the ropes.
I
And
mean, I
you
already
can.
know the ropes. That's the thing. Like you wouldn't have to teach me anything.
Yeah. No. What I meant is that somebody will take you under their wings. I mean,
Oh
because
really?
you really need you need money. You need
Oh
money
yeah,
to
absolutely.
get a
Oh
seat,
yeah. Oh I could.
which we don't have right now. So you get under somebody's wings, and be that fellow's the what you call in a slang word they say be somebody's bitch, right?
Right.
So not exactly that, but I mean at least you work for him for a while, run his tickets here and there, take care of his computer needs,
Yeah.
and pretty soon then he'll let you drive the mouse, and then you are the big boss.
That'd be pretty sweet. Yeah. I don't know if I have to run. I don't think you have to run tickets anymore though.
Yeah, no, they don't. They don't. But whatever, they don't have to really run those physical tickets. But whatever need they have, I'm sure because now with everything so computerized, they need people who are computer literate.
Oh yeah, definitely. Definitely. Man, no, I would totally love to work on like the floor of Chicago or something. That'd be nuts.
But anyway, so yeah, I saw it a couple of times, and I always used to get excited. I went to school there actually, so
Oh
and I
really?
was interested in this area, so I stopped by. I
Yeah.
took a position and went inside.
I got you. So I see one thing now that I'm seeing it. So the main idea with that whole power of three and the order of these printing. So the main reason is you're able to see how. I want you to realize how this candle right. I'm talking about these two right here.
Mm-hmm.
Candle opened, made a low, set the high, closed. What does next candle do? Open, set the low, and then ran super high that way.
Yeah.
So I want you to see how you're able to make a fair value gap in here in an order block based on the wick of this candle and the wick of this candle. Because if you think about how it flowed through in the market, if it came lower, came higher, came lower on that close of the first one, and then the next one opens and then comes low and then does that, you're able to pair these two together and see it as one move. And you're able to look, because you really want to be able to look past the candles, and then when you can see things inside of itself, it becomes very, very powerful.
Yeah, so that part I didn't see right now. I know what you're talking about. So
yeah, no, it's a more advanced thing to see for sure. But once you're able to see it, you'll be able to see within candles. Like I said, when you have that idea of the power of three, like that AMD, accumulation, manipulation, distribution, that order, and you assume that every candle prints like that and you're able to pair it together, that's how you're able to see areas that you're likely to get a bounce off of without actually needing to go into that time frame.
Okay.
Or if you do need to go into that time frame, you can refine it to make it something a bit more accurate. As you can see how you really got no body closes down here besides this, and even that was immediately rejected. But if we go to like a 1 hour, it looks a bit more clean because you have, again, that down move and then that really, really large push up. And you can see that exact same idea. I'm literally telling you about it again here. You have this candle opening, you have a big up move, and then a big down move right here selling into this. Market makers are selling into this so they can buy it up later.
Okay. I'll have to draw these things for myself.
Yeah, if you need to, don't get me wrong, draw it. And one thing that really helps is literally go candle by candle. Just start at once. Like say we're gonna start at this one right here. And literally go candle by candle and just ask yourself what happened. Okay, market opened up here, came here, came here, came here. What the next one do? Came up here, came down, you know. And literally just go candle by candle just so that way you can see it. And you'll be able to see how these are able to use each other to make their moves. Or if that helps, you can also do a bar chart. You know, like, I never used one before. I mean, I know what they are, but it's the same thing. But I don't know if that helps, seeing it as like a bar chart instead, that whole idea of open, low, high, close.
It's the same thing,
Yeah, it is the same thing. But if you're able to see it like that, again, you can see, maybe not the imbalances and things like that as well, but when you're able to see that a candle, you assume it prints in this order, you'll be able to see things inside of itself.
Okay, yeah.
Because you can even see here, it opens here, closes here. You have this large gap in between with this gap here, so you can see how it just comes in to fills it and then continues. But you want to look past and, you know, see how it really printed, right? So this thing came here, opened up, came down, this candle right here. This next one, low, open, low, really big high, and then close. So you can see the gap just off that move right there, how far it moved. That when it comes back into it, you have an idea that, okay, maybe this is a good spot because it's inefficient on buy side. So what does it need to do? Offer sell side at that same area. And then it can go make that move. Because if you also apply, think of what was everyone doing up until this point right here? Everyone was selling it. Everyone was either chasing it down or they're trying to short whatever this downtrend move is, right? So when you have that signal that, okay, people sold it, and you have a sign that they might have bought this, and how do you know that they bought it? That elephant ripple effect, right? They're going to make large moves, and remember, they need orders to pair with. So they're offered a lot of sell orders at once. What are they going to do? They're going to buy them all up. So how do you have an idea of them buying it all up? Is it shows in the candles physically that they bought it, because you get this down move, and then immediately just gets bought up, rejected. And that's that elephant in the ripple. That's them buying that and leaving the splash. And then they're able to buy under this low, because what's under this low? Stop losses. They need to swing low, boom, scoops it all up, and then again, very, very aggressive move up, giving you that sign that they did what? They bought this. because it leaves also a fair value gap for you. And you can even apply the double fair value gap logic right there. 1, 2, support, and then keep going. And again, it's something. All of it is a due time thing. Don't get me wrong, but when you're able to see that that's the order candles are going to be printing in, you'll have a very, very good idea of what is likely to happen and not get caught in a smaller time frame. Because again, even same thing here. If you think about how a daily candle is from here to here.
I can't hear you.
Okay. Oh yeah. Yeah, I can.
Is everything. And
yeah.
then
So the big candle of them buying everything up.
Yeah.
When again, sell side is offered. They need to be offered sell side in order to buy it. That's your first thing you're looking for. And again, do you have that sell side? Yeah, people just FOMO selling this down because they're chasing price.
Yeah.
Immediately rejected. You have another, again, a swing low, collecting that for sell orders. Accumulate more in an air that you already thought they bought before. They're able to get on that second leg for that low risk buy. Don't get me wrong, could you buy this? You technically could. But again, you don't want to start with that. You want to be able to spot that reversal in the market maker model first. And then when you realize that you're on the, my mouse wheel, when you're on the sell side of the curve and then you get that reversal and you switch to the buy side of the curve, you're trusting that anything that's bullish, again, like a double FEG here, is going to hold until you finish the model, which it finishes right up here. And again, this is that old sell model we were talking about before. So it's that sell model that turns back into a buy model. And this is like on a 1 hour, so this is your entire week, basically, week and a half.
Give me, can you give me like a couple of minutes? I just want to use the bathroom.
Yeah, definitely. And that way you could just sell stop the low of the candle. Or see how this one retraces back up into it, and you realize, okay, this thing's probably manipulating. Come back up to here, so that way this can keep going lower.
Okay.
And again, this is just on like hourly candle, you can see. Crush. So, and again, same thing with the whole intraday stuff, and how it forms into a whole day. You can see how the market opens. That's a low. All the manipulation down here, and then distributes higher right above this high. They're forcing people to sell low down here, right? Running these lows, because people are going to put their stop loss behind it, because these are hourly candles also. So you have all that manipulation down here. Well, if you're getting people to sell low, you're probably doing what? You're looking for longs. You can sell it high, yeah. But again, on a full day, it looks like, opens something like that, right? Same thing. Open, low, accumulate, manipulate, distribute. And again, you can see how it spent a very large majority, like the first 8 hours or so, accumulating and manipulating, and then distributed the other half. And that's what I was talking about when you want to look at the time on how large is this candle that you're printing. The same thing on a weekly, and it's the same thing on a monthly as well. Like on a monthly profile, which is why I was saying in the very beginning, where you can trade like 2-3 times a week, just trying to get the weekly range. You know that the high of the week is likely to occur on like a Tuesday or Wednesday. So again, you get the high of this week on a Tuesday. That way you can look to close it Thursday, Friday for that weekly range. Same here, high of the week is set on a Monday. Low of the week set on a Tuesday. So same thing, and then distributes the other way. It's the same thing, right? Open, makes a low, distributes higher, right? 1, 2, 3. Again, but this is on a weekly, and it's the same thing on a monthly. Like we go to a monthly. Same thing on a monthly. April's a bad month. I'm not gonna use that one. Bad example. March though, great example. Okay, March, right here, opens up. These are daily candles now. Same thing. Opens up. Accumulate. Manipulate lower. Because what is this doing? Getting people to buy up and put their stop loss where? Underneath an obvious swing low. You're getting everyone to sell on a daily chart. Remember that. So yes, you're getting people to sell on the 1 hour and everything like that, but you're also getting people to sell on a daily chart. So you should use a daily chart spot as your exit also if you're using that for your entry or for your idea. And that's how that will allow you to turn a small intra-week trade into a low of the month type video, and you could run it for the rest of the month if you really wanted to. If you want to be that crazy. Like me and my friend, you'll see in the server, we caught this as like low of the month, but we didn't hold it for the rest of the month either. Like we're both day traders, so we're out of it by the end of the day. But that's how you can apply that logic. You can still day trade whenever you do it, but then you can also let those things really, really run if you're getting that in the right picture. And again, you can see it opens up for the accumulation phase, manipulates lower to get everyone think it's going to go lower on the month, and then distribute higher. And it's the same thing, and this is over the course of, again, the entire month. So it's doing the power of 3 for the monthly, while on the week, while on the day, while on every single candle that prints. This is the process it's doing. And this is why the market is truly fractal. Is because it's doing that power of 3, accumulation, manipulation, distribution, everywhere, all the time. Oh, sad face. Again, same thing with the whole power 3. Every candle's doing this every time frame. And you can apply the exact same logic to it. Like I said, the only difference is going to be the time it takes for everything to happen. A monthly candle still takes a month to print. So you should expect the first week or 2 weeks into the month to be the accumulation and manipulation phase of that month. So that'll allow you to essentially make a monthly profile and break out into a weekly profile and then a daily profile. You get very, very high accuracy day trades because you know what the larger time frame is doing. That you're going to see shorts in here because the market's fractal, but you know that those shorts are not meant to last, and the real draw is to go higher in this case, or lower, whatever it ends up being on that time frame. So are you with me on all that?
Got it. Yep. Yes.
Sure.
Yep. I'm sure.
Okay. Because within, I don't want to go into them today. Within these profiles of the open eye, low close, and accumulation, all that stuff, there's certain profiles that this will print based off of time. I don't want to go into. The other thing I want to talk about, and how when I first mentioned, you will be able to take a trade or not take a trade solely based on what time it is of the day. This is what we're going to kind of dive into now. So, you're familiar with economic releases. Like CPI, PPI, PCE, inflation, or interest rates. Anything like that.
I know that they affect the market, but
okay.
Is this Forex Factory? Okay.
It is, yeah. So, this site is a very good site to get all of your news that you need for. So, for example, tomorrow's Wednesday. You're more concerned about the red and orange folders. So you know that at 8:30, the CPI report is coming out. Wednesday, tomorrow morning, right? Like 12 hours, whatever. So you know that at that time, there will be more than likely a larger move. And you want to remember that all the news is just smokescreen. To allow them to move price where they want it. You'll see reports often say like, oh, the market moved because of this report. Well, it's like, well, no, the market moved, and they're saying that report is what caused it, when really that report is just their excuse to do so. To justify that move, because otherwise it looks way too unnatural. So, when you have very, very key time releases like this, you can use these as liquidity injections. So, meaning, when this report comes out, people are going to be buying or selling the moment that report comes out. Based on where it goes, right? So that will be used as offerings for smart money all the time. Those will be very, very large, dramatic moves. Like you will see, even in this, you'll be able to see where CPI, like this, one of them. There will be times where, like CPI, or FOMC, like interest rates, can create the high of the week and completely set it. And that will be their smoke screen. Like these really, really high impact events, or like non-farm payroll, if you ever heard of that one.
Yeah.
I'm trying to think most recent. I can't think of a good one.
All of them, interest rate, payrolls, inflation, or these guys are going to come out and declare a 0.25% increase in interest rate.
So that was like this day right here. I did that. So again, you're expecting these very, very volatile moves at those times to happen,
Yeah.
and you're able to view the economic calendar as times where they're going to be trading. Because this was non-farm payroll right here. This slammed down to the huge, shut up. I was able to trade that as well, buying down here to sell it up here, based off of that news event and everything that was happening. And just that alone was able to get me the trade. I had to look at nothing else. And that's what you were able to do, is use time and some specific event happening to get you in and out of a trade, or at least get you in one. So the actual day itself has like 5 sections. So this is not going to be... Okay, are you with me on the first part of all the time stuff? Okay.
Yeah.
Okay. So these are essentially what's going to be known as kill zones, and times where you're expecting price to do certain things and move. So the market, I can try and look. Okay. So the market is essentially divided into a few blocks at a time. I don't want to. So you have essentially the Asian range, which is about 7 to midnight. Because again, midnight is when the algorithm's true day starts. At midnight New York, because New York is trading capital, whatever. That's when it starts. You have what's known as the London zone, essentially the London kill zone, which is 2 to 5. And that's where you can see you get some kind of good trades phase. That's like the session for London traders is 2 to 5. New York, ICT basically says it's 7, but that's kind of early for stocks. I would really start at like 8 o'clock.
Okay.
8 until noon, essentially, is the New York session, and then you have the PM session after, which is like 1 to 4. So I want you to see how all of this is. There's very specific sections in which you can even see on here is when the volatility declines and when it picks up. You can see when it's between 5 and 8 o'clock, you can kind of just this sideways stuff. And then in New York, it uses that as a range to run that high and then run to the low, and that's how price is able to expand and wipe everybody out while it does it. Because if you think about what's really happening in this order of candles printing, everyone that's here is traded in this range right now. You got stop losses above here and stop losses below here.
Yep.
You run it lower to run out the sell stops.
Yep.
If that's your manipulation, you can look to sell it back to those buy stops that rest above here. And then again, you can look to those sell stops and then run it back the other way. And that's how they're able to generate people and also wipe them out all at once. Is you'll notice price will make expanding moves. So it'll start off like this and then it'll expand. Because anyone that's in here is wiped out off this up move, right?
Yep.
Anyone on this down move is wiped out from this. So now no one exists here.
Yep.
Anyone that wanted to be a trader either took out long or took out short, so now no trading is there. Everyone's gone. There's no more liquidity there. So you'll notice that's how price will be able to make its large moves, is it will wipe everybody out and then use the tail ends of each of the range, because they know people exist there to keep going where they need to go. So if they need to get high, like really, really high for whatever reason, they'll run multiple lows and expand that way, so that way they can just crush it all at once. Because if you think about it, they're getting people to sell low here, they're getting people to sell low here, sell low here, and then sell low here. Why? Because anyone that's chasing this is going to put their stop loss right behind the move as it goes. So you're able to funnel people in that way and generate everyone on one side all at once. And because you're expanding the range and taking out any consolidation prior, no one here exists. Because the large moves expand through the range and take everybody out. So you know that the only people that exist that are left are the people that have chased the move. And that's how they're able to funnel in where they want them. That's why you'll notice, again, you have that consolidation. It takes out the low and then runs that high. And then can go back there. And again, same here, you have this whole consolidation. It runs the high of the consolidation, and then it goes and seeks the low immediately after. And that's how it's able to use both sides of the market to pair a trade with, because they're using the buy orders above all this.
Sorry.
Can you hear me? Did you hear me talk about how this range was 120 points?
I don't remember. I think, could you say that again?
How this range from low to high was 120 points. And so the main reason I was saying is you're going to see the exact same thing, but not understand the magnitude that it is sometimes. Which is why if you ever see like in my screenshots, there's no y-axis. Is because that's not what you're looking for. It doesn't matter the actual raw points that move. What matters is you're just seeing the pattern and the logic. Is like I said, this classic down move of like New York dumping, reversing at 10:30 to do this happens all the time. This one just happened to be 120 points, but there will be the same profile where market does that. Market dumps at 9:30, reverses at 10:30. This was 120 points as well, funny enough. But there will be times where you do the same thing and it's like 200 points, but it's the same logic and everything, the exact same logic, right? Same thing. Market rallies up and then slams lower. Same thing. Just you go up first instead of down, right? But this was 1363, so like 140 points, right? But again, when you're looking at everything, you just want to see the pattern for what it is and the logic behind it, and just ignore the sheer raw points that it moves because that's not what matters. This is still, no matter what, a market maker buy model, no matter how you look at it, right? Low, high, low, higher, high.
Yeah.
Low market maker buy model. This one just happened to be 300 points wide. That's the only difference. It's still the exact same logic of you get that smart reversal, because that's where they're trading with, again, a good liquidity pool by force. You get the break, and when you're on the buy side of the curve, you know that anything in here that looks like a sell is probably fake. And so that way you can run it that way. So again, you're always applying a bunch of things together to come to that conclusion on whatever it is, right? Because I'm applying, again, that order block, the news impact at 8:30. It's Friday. We're under midnight open. That type of thing. Because again, if you think about how a daily candle forms, which is actually pretty key, you would want to be if you're assuming you have a bullish day. How is a bullish candle gonna open, set the low, high, close? You assume a bullish candle is gonna print like that.
Yes.
So if you're looking for longs, you want to be anything above that opening price at midnight as an opportunity to get involved in. If you are expecting a bullish price delivery for the day. So when you have, like on here, when you have all these pokes underneath midnight, and you think about what the daily candle looks like right now, all of this is below midnight opening price. So if you're expecting a bullish day, you know that anything down here is a discount that you can use to get involved in. Because you know that you're probably going to manipulate and distribute the other way. You want to be in at or below the opening price. Or even if, like, say you miss everything, really what you can do is if you spot all this manipulation, you're crossing midnight open, you can just buy stop that and just market order that and just trade that direction. If you're correct about it, breaking that way. And say you miss the trade, you get in. Same thing here. You can see how we have midnight open here. You can see how we poke above it here, and then we poke above it again, above these highs also. So you're able to set the profile for that day. Because again, this is happening at like 3:30, like right in the London zone. You have a trading and manipulation above midnight, tripping buy stops at high prices, inside of what a fair value gap. So it's how you're able to like I said, it's how you're able to piece everything together and make a narrative / a story, and then that's how you get very, very high probability trading. Because one of the things that I think I was talking about, my server, he's a pattern trader, which is totally fine, but you're sacrificing like probably at least a 20% in your win rate when you apply everything else. Because there will be times, like I said, where it looks like a buy model is going to look exactly like a buy model at the reversal, and there's nothing separating it other than the higher time frame, the bigger picture, knowing that it's probably going to fail. That's the only thing that can save you. And so when you're able to apply that narrative and those larger pictures and the other components, you have a much higher probability of a trade working out in the idea of where it's probably going to go. Just like I was saying, that buy model or all the other ones and before, how they just ran up just to fail. You know in the back of your mind that they're probably going to fail. Versus there will be some where you're like, this is probably going to complete. Because of X, Y, and Z. And again, same thing. Admittedly, this was FOMC day. So, not a good day to trade. But you can see how market opens up. All the manipulation above midnight. Just running highs, running highs. All that's doing is allowing people to get in short. And then runs this high up here. And then does a distribution. And again, this is why I was saying I don't have the chart anymore, but this is why it doesn't matter how the candle prints. In terms of the actual order it does it in, you just need to realize open, high, low, close. The actual order. Right?
Actually, it even simplifies trading a lot. I mean, if you just look at it that way, it even simplifies the thinking process.
It really does, because there's only one way to view it. You assume it did this order, and you're applying this logic to it. Because you can even see, so this is the third, right? You can, I don't know if you can see it in this. You can see this is how March 3rd closed, right? Opened, traded all the way up and set that high, and then distributed lower. This is that print. You don't know that it printed like this based off this close, but you assume it did what? It opened, set the high, made the low, and then closed. And that's technically what it did. It opened, set the high, made the low, and then closed. But the order doesn't matter. The order does not matter. You're just assuming this is the order it did it in. And 9 out of 10 times it's going to be just like that anyways. So on the off chance, say it made that low first and then came all the way up and then closed it, that's fine. It doesn't matter. You still recognize in the back of your mind what really happened with that candle and what is most likely to occur. And so, like, what is this one, the 28th? Same thing. That same day we're talking about. Opens up. That's a low. Distributes higher, right? What does it look like on the daily? Open. At the low. Distribute higher.
Yeah.
I know it sounds like it does sound very simple, but when you are able to apply logic behind everything, because remember, all this is a computer. It has to follow logic. You know how code works, right? You specifically. You know how software runs. It needs, everything has to be coded. It has to be on purpose and deliberate. There's no, like, you can't, you know what I'm saying? You can't half-ass and tell a computer how to do something. It's going to do exactly what you tell it to when you tell it to do it. And it will not deviate at all. If you tell it to do X, Y, you know what obviously you know, but you tell it what to do, it's going to do exactly that, whether the code is bad, good, bad, whatever. It's going to use the exact instructions you gave it. So none of this is random. So when you're able to apply true logic behind everything, like you said, and view it in a very, very simple way, and think of it all logically and nothing else, you can get a very, very high probability of something happening. And you just read it enough times, you can just call moves throughout the day just by looking at it. And that's really how you want to get the reps in for practicing. Like, really, if you can, an experiment I thought about doing is look at a chart for 5 minutes, or less than that, whenever, and have an idea on where, like, the next few candles are going to go. Just to see. Like, I will literally open up my phone or platform, whatever, look at it before I go to bed, and say it's going here, and then sleep. Just to see. Just for literal practice and no other reason. I'm not doing it to trade. I'm not doing it for anything. I'm literally doing it for practice. Say the market should go here. If I'm right, great. If not, that's fine. See what it did. And again, you're just grinding out hours doing it. Like, ah, crap. Gosh. I don't have a screenshot, rip. Okay, it was basically... It was here, like, before I went to bed. Same thing, though. Same thing for the logic. Before I went to bed and before we had London Zone, I basically told myself, run this high, sell above here, where can you sell it back to? The people underneath here. That's what I told myself before I went to bed. And that's what ends up happening. It takes a while, but it ends up happening by the time I wake up at like 8 o'clock. And again, you're doing it literally just for practice and repetition. There's no way I can prove to you that I said that and had this idea, but it doesn't matter. You're the person that has to get the practice and reps in. Right? Oh, I can just say it, you know what I'm saying? I can just say it in, oh, I'm delayed. Oh, I've been delayed. I've been pausing and unpausing based on delays. So it is there, but it's not.
It's good. I mean,
Yeah.
I think I get the idea.
Yes.
I'm going to try it out, and I think it'll be better that way.
Yeah, that's really how you build in reps. Because everything's fractal, you can log on and look at a 5-minute chart and probably find a model or something along the lines to use as just a shot call, is what I call it, a server. Where you just call the daily high or low or anything like that just to see. Literally for no other reason other than practice. You're not doing it to trade it, it's literally less than trading. Because you need to be able to essentially read the chart and have an idea and then trade behind it. And demo and then trade behind it. But if you can't read it first, there's really no point putting money behind it, because I'm sure you've had emotional dissonance trying to trade, ends up forcing even more mistakes, right? Because you stop seeing things clearly. It's like I was saying, I can't prove to you that I had this idea, oh, we're gonna sell above this high and close below and sell it back to this low. I have no way to prove that to you. I literally can't. But that's the idea you want to have when you look at a chart, just because, before you go to bed or whenever, just to do it. So that way you can see what is likely to occur, and again, it's all just for practice. Because it's literally less than trading. And that's how you're going to be able to get the reps and things that you need. Because again, we can do the same thing. We can apply that power of 3, right? And you can even see in the London session at like 2 to 3 o'clock specifically, it sets that high and then does the distribution, and then New York just runs it because it just happened to do so, because it's New York. Now with that said, in those sessions, how we have the power of 3 in the whole day, we have the power of 3 within those sessions. So I want you to realize, because this is actually good, I'm just going to keep talking about it. At 2 o'clock, you can use the same thing, the same logic for midnight opening price, and apply a candle or a day, quote unquote. Those are the same thing in this 3-hour window. Instead, you can see how it opens up, that's the high, and then manipulates lower from 2 to 5 o'clock. But that's it. See, you see where I'm saying how everything just keeps diving into itself based on these times and everything. And then this is why everything's fractal. And you can just do everything on repeat, and you'll always have enough setups. Which is why, like I said, you just want to be shot calling randomly all the time, because you just need, right now, Grinder, all you need is hours viewing it. That's really it. And the only way to do that is to look at it yourself in your software, of course, and then, like I said, just take a shot call. Like what I'll do, literally, I don't know if I have anything on Dixie still. Like I'll draw Dixie just because all the time. I don't think I have anything on here anymore. I'm so sad now. So, dude, I wish that's. Oh, I have something. I have stuff on trading. Actually, I could show you. Like all you do, like what I do, and again, you got to do this for. You're gonna do this forever until you're done learning, which you never are, by the way. You same thing. I was talking about this internal liquidity for days in my in my server for people, and again, you're just doing it to shot call. Like what I'll do is I'll just open up a chart of whatever it is and I think it's gonna go here. I'll just put a circle. Like let's say we think it's gonna go here. Just put a circle there and just see if it reaches there the next time you get back on. Like literally look at it, say, okay, probably gonna go here, because you can even see from this buy side, FEG's back on the way down. Look at the green candle supporting price here. Right, you can see it all. FEG's rebalancing, rebalancing.
Yeah, and this is kind of a market maker sellout already.
Correct. Right now it is. You're on this. Okay, so let's be specific, because I just want to be. You are on the sell side of the curve right now.
Yeah,
You don't know if this model's going to finish.
Okay.
You can have a very, very strong conviction that it's going to finish, but you don't know for sure. You need to use a higher time frame to delve that in. Because, for example, do you remember when I talked about how on a, for example, if a model finishes and it keeps going, you're on a higher time frame model. You could very easily make the argument that this whole thing is really some larger, like 15-minute model. Like if we go to the 15, for example, like I said, this is how you can start seeing everything fractal. You can see the larger cell model that's forming inside of this. So that while this 5-minute finishes, this 5-minute one could have to keep going all the way down here.
Yeah.
For example. But again, so you don't know, and you have to use the higher time frame to get your ideas of whether is this going to fail or not. And that's all you can use, because I want you to notice here how if you have, for example, opposing, like for example in this case, fair value gaps, which are the easiest ones to spot, or like down closed candles in this case, you can see how you have the sell side of the curve here. Right? You have green candles supporting price on the way down. Same thing as here, but it fails. Right? It trips, it fills this gap, and so you can quote unquote say it's a failed sell model. And that's all you can use to separate is a higher time frame as to why something might fail or not. Because again, you can see it even here, sell side of the curve. You're retracing lower. Green candles are supporting price, but again, it's just a fail and keep going. Same thing here. These are probably selling off, but for all we know, it can come here and then keep doing that. And we don't know that. And that's what you have to use the higher time frame to dictate. But for right now, for argument's sake, you're on the sell side of the curve, but you don't know if you're in a sell model yet. Whether the sell model is going to complete or fail is what you don't know. What you do know to be factual is you're on the sell side of the curve. So when you hit this spot and then you get the sell side and you get the curve reversing the other way, well then even more so you can probably trust this. But again, because every smart money reversal and all that stuff is going to occur at a spot that what makes sense. It's not going to do it randomly. It's going to do it either under a low or at some old fair value gap or some reason in particular it's going to reverse there. It's not going to reverse out of thin air. It can't do that. It's not efficient for it to do so. So again, I just want to make sure we're clear on the definitions because I don't want you to confuse them. By all means, this is sell side of the curve right here. You have green candles supporting price, FVG's down, textbook sell side of the curve. What you do not know is if this sell model is going to finish underneath and say go for this, or it can hit here, finish the sell model, and turn to a buy model, or it can say just keep going. You don't know that part. And that's what you have to wait and see. But that's what you want to do when you're shot calling. You just want to hop on, analyze it in, within a certain time window. For now, I would just keep it at 5 minutes, but eventually you'll be able to see it like I did, and you'll see it in no time. You'll see it in like 30 seconds, not even. And you'll see everything instantly because you'd see it so much on repeat, like chess or anything else that is pattern recognition based. You're going to see the fair value gaps instantly and know exactly which ones to use and everything like that. And again, you can see the same thing, double fair value gap here, 1, 2. Push down, green candles pushing down, like it's the same thing. But this is just on the US dollar. And so you can go all, Euro USD, do the same thing. GBP, JPY, like you just, USD CAD, that type of thing. You'll just scroll through these just to literally see and test what you think is going to happen. And that's it. And for no other reason. You're not even doing it for trade. You're using it just for what's known as like tape reading. You're just reading the tape and how price is printing. Right? Because again, even same thing here. You can see buy side of the curve. You see the shift to sell side. But notice how it fails to not take this. But it makes it 90% of it the way there. Right? So I just want to be sure you're good on like what is sell side of the curve, what is buy side of the curve, that type of deal.
No, I understand that part.
Okay.
But I think you said it very well. I think you just need to be able to. You can't just trust it. You have to confirm that that pattern does exist.
Yes. And again, there will be times where you'll have a very, very good idea that, okay, this is probably going to finish. Like in here, from this buy model from here to here, you have nothing inefficient that would be considered for it to be worthy of stopping. Right? Anything that was inefficient is already filled here. It doesn't care about it. It already ran these highs as well, giving it a sign that it wants to go. You can see all through up here, there's nothing really stopping it. So that can give you a much higher chance of, okay, it's probably going to the terminus at the top. If that makes sense. Versus here, you're coming in, you're saying, okay, well, I have a very, really large fair value gap down here. I'm likely to get some kind of reaction out of it. So I can trade this sell side of the curve up until here. and be okay with it not coming all the way down here. And you're capturing most of your move out of here. And that's how you're able to trade and still make money without being quote-unquote right.
Okay.
And that's like the flexibility that you need for this. Because again, you don't want to be able to sell this and have it come 99% of the way down and not pay yourself. That's silly.
Yeah.
That you trying to be right and you not trying to make money. And that's a really perfectionist thing that you might struggle with, depending on the type of person you are. If you're not perfectionist, it's really not going to matter. But men especially, they try to be right, and they would much rather be right and hold a losing position, let it come back to break even, anything like that, than actually just admit that they're wrong and cut the trade. And allow a trade to bleed them much, much harder than it should have for no reason other than they didn't want to be wrong. And I can speak with that from a lot of experience.
Oh yeah, it's the same here. I know that. I mean, I sometimes develop a conviction. I mean, I'm not talking about this kind of trading, the price action, but on a particular stock, I develop a conviction that it is going to hit a particular number, and even if it goes down, I keep holding it.
Yeah, no, same thing. Is your inside and your mind getting in the way? That's what I'm saying. You want to be looking at everything objectively, because especially with this computer, that's all it does is use logic. It can't use anything else. Anything that you interpret the other way is you doing it. And you have to recognize that it's you doing it. There's nothing inherently threatening about a candle printing. Anything you apply to it, any feeling you give to it, is you doing it. Right? Because all this is information. There's nothing inherently threatening about information.
Yeah.
It really is. So, I want to be... I'm not too concerned about the time zones for like the London and the New York. The big thing I want you to be able to take away from this is the time aspect of seeing the candles within themselves. Because again, fair value gap right here. Boom, run to that low. It's not like nothing is random, right? Not a single thing in this is random that happens. And especially when you are able to notice, clear highs like this get ran, look for signs of a reversal, or what I'll call is deem as a rollover, where people are clearly trapped that long this. Where's their stop loss? Right underneath that push. And then also, where's the safer one? Right down there. And eventually, because again, anyone that bought this up here, you close in here, you're immediately trapped, and they're feeling it. And that's why I was saying you always want to ask yourself who's trapped and everything like that.
Yep.
Because if you can find out who's trapped, that's who you can take money from. And that's the side that you can join on in the market. And again, everyone trying to chase this all the way down here, well, now there's pressure on them going back the other way. Now you're on buy side of the curve. There's nothing, don't get me wrong, you have fair value gap here that stops you. But what happens? Just a reaction out of it, and then keeps going. And that just comes with experience of market maker models, truthfully. Knowing whether you're going to get a failure versus... But you're pretty much guaranteed to get a reaction, because even if you get a reaction or reversal, you still have to get a reaction, if you think about it, paradoxically. That makes sense. Like, if you get a reversal here, that means you got a reaction, but you can get just a reaction, right? I just want to be sure, that makes sense. I don't know if that does word-wise.
But yeah, so it did go and touch it. It even cleared it.
Yeah, it
came down a little bit and then went up.
Yeah, exactly. So it gets, because this is how people that trade like us get trapped also. Is they see this, push down, fair value gap here, look to sell short here, and it traps you in because it starts moving away from it. And so you still get retailed into it almost, because you think, oh, this is the top now, and it's moving away, so you sell into that. But in reality, it's just a reaction. It just acknowledges that it's there, and it closes out the sell orders by offering buy orders there. And it's just being an efficient market and stopping out the people that try to get in early. And so that's why you're able to buy under previous lows and shit on an up move, or above old highs on a down move. It's because it's able to get sold into or countered.
So I think we have some reaction from fair value gaps. Do we have any reaction from trap traders also?
From trap traders?
Yeah, like the ones
right
right
above up here.
Yeah, the guys who bought it, now they're trapped there, right?
Yeah, because anyone that bought up here, they're only
They-
trapped until the candles and price becomes lower, technically. Right, because when you're up here, well, you're still fine. When you're here and you're closing down here, well, no, so now you're not fine. Because you bought in at 1017 and price is at 1016.
Mhm. So
So,
yeah, after that, it's only going to come down. So now those guys are trapped up there.
correct. And which is why I said it also will use speed, is because you don't want to let people pull their orders and get out. If they walk away or they get scared and they freeze, that type of thing.
Mm-hmm.
And you don't want anyone that's trying to short this also that has an idea what's going on. You don't want to get them in either, because they're not going to FOMO in because they're smart enough to not do that.
Mm-hmm.
So they're just going to keep running and make sure no one gets in.
Mm.
That's why you see something like this where you scoop this low and immediately just charges.
Mm-hmm.
That's that speed that you're looking for, that elephant ripple effect that they're in.
Yeah, that's definitely an institution doing it.
That what?
Definitely an institution doing it because they want to move fast.
Yes, they want to move fast, and again, how it just comes back immediately and then goes again.
Mm-hmm.
That's what you want to look for. Not those, if you remember, like, way back how I was telling you about, you don't want, like, a low here, and then you don't want to have it to lollygag and do something like this, and then expect it to go. It's going to be like some quick moves. Anything like this, you're just assume it's going to be a double bottom, it's probably going to roll over, in all honesty, and it's just going to trap people. Because that's what they have to do in order to create, for example, a low to sell back into. So best example I can think of was actually today on GU as I was watching it.
Mm-hmm.
Which again just goes to show how fractal and everything this is and how often it happens. On you have this up move here.
Mm-hmm.
Everyone's just going to be chasing to put their stop loss underneath. So there's no sell side liquidity here because this was just created. Anybody that wanted to be a seller is able to be a seller there. What does it do? Make a double bottom and then start to push away. That allows the sell orders to build in there to go lower. But it'll, like I said, it'll either make liquidity based off of displacement or time. Same thing here. You get the displacement, but you also get the time factor. See how long this takes? That's not a sign of them moving. It's like if they're truly moving this thing, they're not going to take their time. They will not do it. So by the time you get all the way down to here and you realize, okay, well this is probably not a good place to long, even though you have fair value gaps here and everything like that. Because again, double bottom, you know sell orders are sitting on there. They can use this sell into that. And you know people are also trapped on this move. So if people are already trapped here and you have a double bottom, most people are probably, long off a double bottom right now. Most of retail is, you can assume. You want to look to inverse that and go short against them. So you know any up move like this is probably just a fake low to get more people in. That way you can crush it all later. And again, that's why that drawing is so key. With that whole displacement and time. If they're taking a while, they're probably not in it. They're really probably not in it. Because when they're in it, look how fast they move. Right? They were in on this, don't get me wrong. They were in on this up move, yes. They were not in here. If they were in here, they would have been moving it. And you can apply just that logic alone. But when you start seeing that aggressive move down, well, all of a sudden, because again, think about all the things we have against the longs right now. They're trapped up here, double bottom, and it's sitting here. You can take those three things alone and realize that longs are in trouble. So you should not be longing. And ask yourself where are their stop losses? Underneath here, and probably underneath here and here. And again, once you even slam this, you can get more people to buy this thinking it's a double bottom and get people to think this is a stop out. And this is how they're able to generate more liquidity at a low to sell into and get people to think that, oh, it's just a low, it's low. Which is what I was saying, it's like a really human thing that just occurs. They'd rather try to catch the bottom than get on the trend. For whatever reason. It's a very, very weird thing. But when you have those fake moves like that, that's how they're able to generate new orders in. Because think about this. You're like here. You probably think this is close to the low, right? You have the stop out here. You're getting some bullish candles. You're thinking you're probably going to go for here. Or you can see how at the very least how somebody, somewhere, retail sided, could come up with that idea. You see what I'm saying? That we dying on the microphone. I mean, I pretty much got most of that in the recording, but
Yeah, I wouldn't listen to the recording. I'll have to listen because there's a lot of information this time.
Oh yeah, no, every single thing is gonna be fucking jam packed, which is why I want to make sure as we continue you're understanding everything, because there's no point in going on in all honesty if you don't, because everything's building off of each other.
Yeah.
So, and again, you can even see on here because this is that same midnight open candle, or the midnight opening price. You can see how opens, sets the low, and then closes like this. Think about how this candle really closed, if you think about this, right? Open, high, low, make some kind of retrace, low, and then closes right back up here. How is that going to look on a daily candle?
Right? I mean, it's a small candle, but closed up.
Right. So it opens, you got that high, and then you got the close, like here. Or no, closes up here. But you get what I'm saying, right?
Yep.
So this is how you also want to be able to view. So just like how you want to be breaking candles small, you want to be clumping them together the opposite direction. And this is how you're able to see everything fractally. You can zoom in on candles and see it that way, or you can combine them together to make a larger time frame candle and see it the other way, and get all the picture you need on like one time frame. And that's when you're really able to become powerful and see things inside themselves, and you'll have unlimited setups. Because again, think about, because right, this is how this candle should have closed, right? Something like this. But again, it printed like this. It doesn't matter that it did this. What matters is that it closed like this, and you assume it did that type of order. Because we can even see here, just like we were talking about, it closed just like a doji. This is that candle. Right? Oh, I didn't realize it closed right there. But same thing.
Yeah. Went up a little.
High, low, close. Doesn't matter that it did this, it still did that order.
Yeah.
Set the high of the day, set the low of the day, and then closed. And that's all these things can do. And what, like I said, it's super important that you're able to condense candles like that as well, and think about what it looked like on a daily, and then just compare it just to see. That way you can see candles larger within themselves, and then, like I said, see it smaller, and see how all these wicks, like we'll go into these wicks here, just because this is at 6:30 in the morning.
Yeah.
We'll on the 15th, so we're gonna go on like a 2-minute and look at the same thing. This. You can see how this is the same models that we're looking at. Same exact thing. You can see clear as day fair value gap here. That's hit. Reprice multiple times. You get another one here to go off of. So you get confirmation in its own spot, and then look to go in the direction of the larger time frame. Because that's the only thing that's going to separate you, is the larger time frame. That's it. Because again, you'll learn eventually this is just a breaker. But the only thing that's going to stop this breaker from working versus a different bearish breaker is the higher time frame, and that's it. That's the only thing that will separate it, which is why I was saying earlier it's dangerous to be a pattern trader. Because you're going to see the same thing regardless. It doesn't matter. Especially when you see things fractally. Like one of the guys in the server, he trades on time frames like faster than I do, and he just scalps all day. But he trades the exact same market maker models and things that I do. The exact same thing, but he's in and out like 10 minutes. But all the principles are the same. And so that frequency is there for you to trade it however you want, but you need to see it first. And when you have that higher time frame and everything like that, and you can see candles within themselves, you'll be surprised how well you'll be able to view things. And how, for example, this is all just internal liquidity to run this up here, to fill this, and then go lower. Because again, that same consolidation idea, you have the box, you run the buy side of it first, what do you have left? The sell side immediately right afterwards. And you can even see how you get some kind of trend line if you really want to go there, right? That's how you can get retail in and see where they're at, and that way you can attack them. And think about what are they doing right now? who's trapped and can I attack them?
Mm-hmm.
So, yeah, so that's pretty much. I'm kind of good at leaving it there in all honesty, because then we can just talk about the Discord and be done.
Yeah.
So I just want to be sure you're good on everything with the power of 3 idea, because that's really what I want you to do when you look at candles. Is
Mm-hmm.
try to look inside candles, see
Mm-hmm.
the fair value gaps, the push up, the push down, and then
Mm-hmm.
go and see what it looks like on a smaller time frame and realize it's the same thing,
Mm-hmm.
as well as understanding that wicks, the order that candles print in.
Mm-hmm.
For example, this one opened up, made the high, closed, and then this one came down, dug into whatever was in here, and then pushed higher. And that all these candles are the same as they're all quote unquote daily candles. You can treat a 4-hour candle like a daily candle
Mm-hmm.
and do the same thing just fractally everywhere. Right, same thing here. At 9 a.m., this thing took out the high of the previous candle for the manipulation and then distribute lower.
Mm-hmm.
What is this? This is Monday the 1st.
Mm-hmm.
So just at 9 a.m., we start here. We manipulate immediately and then distribute the rest, and then close at the lows. But again, you can see the same thing. You'll see the same thing on a daily. It's just going to take all day, but you're going to see those 4-hour setups inside of your daily candle printing, and that's what's so key. And when you're able to see it like that, you'll be able to see setups within themselves, and then you can really, really go crazy on the pattern recognition, because you'll be able to see everything within itself, and you can see as many times as you need, and you can just go to a smaller time frame and see something.
Mm-hmm.
And eventually you'll be able to look at a market, go all the way down to like a 2-minute chart, and have an idea of where like the model is doing or what it's likely to do, just again for shot calling. That way when you try to take a 15-minute model, your percentage chances of it working is much higher.
Mm-hmm.
And then that's where you actually be able to get the real moves. But you just want to grind and tape read and just watch price live like a 2-minute. That's like one thing we can do, especially on Fridays,
Mm-hmm.
is